Good Tuesday morning now. We're doing this a little bit earlier than we normally do, but this is First Time Homebuyers class, episode 3, and this is going to go over a lot of the governmental loans. Today I have Kyler Tonkovich here with me from Opportunity Bank, and he's going to really give us a little bit more better picture to kind of pick the right loan for you that's going to work out. You know, at First Time Homebuyers, there's so many unknowns. And what this class is going to really teach you is kind of like those 3 governmental loans, and he'll go into detail just to kind of give you a little heads up. So when you go in there and talk to a lender, you'll have a little bit more heads up, and you'll kind of know where in Helena you want to live. So again, thanks for coming in, Kyler.
Yes, definitely. Thanks for having me in.
You know, one of the things I was just talking about is that the 3 governmental loans. You know, what are they?
So there's VA for all the veterans out there. There is rural development for basically developing outside of city limits, so you got to be outside of city limits to utilize that loan. And then there's FHA.
Okay. You know, when we talk about the VA, you know, the VA, we really want to appreciate the veterans that helped us out and stuff like that. You know, what does that all entail?
So the great thing about the VA loan is it does open you up for 100% financing. You don't have to come in with a down payment. Sometimes if you get seller paid closing costs, really the veteran can come in with very little, if anything, at closing. Another great perk about that is there's no mortgage insurance. So there's no PMI for default insurance or anything like that. So that does help alleviate and keep down that payment a lot more than some of those conventional loan programs. Plus you also get a better rate compared to some of those conventional programs,
which is amazing. You know, it's the thing is we're trying to, especially in Helena, we have a lot of veterans, you know, with the fort and everything like that. You know, it is a great loan type that I would recommend if you're a veteran to go talk to Kyler about. And then also we have something on our side is Homes for Heroes that we do with the veterans also, is we give 25% of our commission to them to thank them for their service. And so with a lot of the discounts and everything that the VA and Kyler can help you out with and with us, it really kind of helps you out to get you into the home, which is amazing. You know, when we kind of go into the rural development loan, the USDA rural development loan, you know, I think there's a lot of misnomers about it because they think towns. They think, you know, Helena, it's the city limits. Yep. But it's not East Helena city limits, right?
No.
It's just Helena city limits.
So yeah, basically rural development is kind of based on the metropolitan kind of area. I mean, I know that's kind of funny to use that term in Montana,
yep.
Because we don't exactly have anything that's huge here. But you know, we've got RD, which comes into, you know, Helena, Great Falls, Kalispell, Butte, Missoula, and Billings city limits. So anything outside of those city limit districts do qualify for rural development loans, which basically opens you up to, you know, that 100% financing again. In some instances with seller paid closing costs, you can get in with very little, if any, down payment for the first time home buyers. So like East Helena qualifies, towns, and any of those small towns do qualify.
Well, we have Crystal Eckerson here.
Hi, sorry,
she's also
I'm late.
with Opportunity Bank. We just kind of went over a little bit of VA loans, and we just kind of were wrapping up on RD. You know, the thing about RD, again, it's outside of Helena city limits. And so there's a lot of houses that are on the outskirts of the city limits that we can sit there and ask the lenders and say, hey, is this qualified for rural development? Which is nice because all of a sudden, like Tyler talked about, there's lower down payments. There's so many other benefits that come from that. So you don't have to do any of the conventional or FHA loans. So the third one we're going to talk about now is FHA. Would you mind ringing in on that?
Not at all. So FHA is a government loan program and allows you to put a minimum of 3.5% down. There are first-time homebuyer products available for down payment assistance that run in conjunction with FHA, so there may be the ability to actually get that as repayment or a part of your loan program. Obviously, it depends on qualifications, so there are income limits on that, and you have to be a first-time homebuyer, some other things. Always important to visit with a lender, of course, to see what you're available for if you're looking for down payment assistance sources. But FHA in particular, 3.5% is the minimum down. Nice thing about FHA is they don't set their mortgage insurance rates off of credit. So if you have credit scores that are maybe below 700, it's a comparable beneficial product when you compare it to some other things as far as affordability. It does have a maximum loan limit that varies by county. So sometimes if people are looking in, say, over $300,000 price point, just to round it, you may not be wanting to go FHA just because you have a cap as far as what your loan limit can be. FHA also allows the purchase of multifamily, so you can purchase a 2, 3, or 4 unit property as long as you're going to occupy one of the units and still keep that 3.5% down. So that's a good niche for it too.
You know, we were talking a little bit, and you know, this brought up a good key point. A lot of times, we haven't really talked yet about this, is the PMI. You know, because we have FHA or VA that we talked about, there wasn't that. And then we have all these other loans that do have that. You know, Kyler, would you mind mentioning kind of what that truly is?
So PMI is basically just to cover the loss for like the investor or the insurer of the loan. So basically, if the home is given back on foreclosure and it's sold at a loss, that PMI covers that loss that the investor would take.
And so they add that a little bit to the mortgage is basically what that is so it's underneath what percentage. So if it's a conventional loans, you know, a lot of times they don't have that unless it's like a 3 or 5 or 10%. And so that's just kind of, if you have 20% down, you're not going to really have to worry about the PMI because that's the way that sets up. But you're talking about below that, like we're talking about with the FHA and RD loan, there is going to be a little bit of buffer with the PMI. You know, one other thing before we wrap it up today, I wanted to kind of chat about the minimum qualifications for, because especially first-time home buyers, you know, they're going to have the people that are going to be maybe not the best rates. And so what are you thinking on the credit score? You know, I know it does change, so this is not going to be something that's going to be set in stone, just letting you know. But what is the minimum scores right now that you could say between each 3 of the loans?
Sure.
Go ahead.
All right. Well, with VA, there's actually an Opportunity Bank as low as a 530. I don't like to advertise that because there has to be some factors in there that meet that. FHA, looking at a minimum of 580. Rural development, a minimum of 640, and then conventional, a minimum of 620. Now, those are base level minimums as far as each loan program, but if you're looking at down payment assistance sources or grants, things like that, there may be different qualifications.
And that's why I wanted to say this is a snapshot as of today for those, because they do change, you know, periodically. And you know, the great thing is, I would always, if you have any interest in buying a home, or if you're renting right now and you're saying, you know what, I don't know what the steps are, go talk to both of these. One or both of these people, and they'll help you out. I mean, that's the biggest thing. What this whole class is for is to give you a snapshot into what real estate is and what buying a home is. But the thing is, these are going to be the best people for you to find out if you qualify or not.
Well, and one quick point I wanted to bring up, I didn't hear if you covered conventional at the beginning.
Did a little bit,
okay. But just as a highlight, conventional you can do as little as 3% down as a first-time home buyer. So it's just, and if you have a credit score above 700, that's where it's good to look at your options and not just assume that FHA might be the best route.
Yeah, and keep in mind there are some income limits with that as well in different areas. I mean, really, it's just each person's situation is completely different. So, I mean, the best thing is chatting with a lender to figure out what exactly we need to do to tailor the perfect loan program for you.
Well, that sounds great. Well, I appreciate you tuning in, and I appreciate Kyler and Crystal coming in today from Opportunity Bank.
Thank you.
Go chat with them if you want, and they'll give you the right direction. Thanks, and enjoy the rest of your Tuesday.